Are you trading based on consistency? And are you confident in your trades? Or does your trading and your emotions look more like a roller coaster, where some weeks you're trading based on hammer candlesticks, the next week it might be the MACD, and the next week the market's overbought, puts in a double top and gives you a shooting star. You think it's the perfect trading opportunity just to watch the market head higher and slowly drain your account, while at the same time you continuously switch systems, losing all confidence and inspiration you had at the beginning of your trading career. If that sounds anything like you, then today's video is going to be essential for you to improve, because in today's video, I'm going to show you how to build a rules-based system. Not only that, I'm going to show you a rules-based system I've already created that you can take and test and verify through historical data that's profitable for you and include into your trading plan. And I'm going to show you how to include it in your trading plan as well. So if that sounds like something you're interested in, and if you're interested in improving your trading in the Forex market, click that subscribe button down below the video to the right-hand side. Click that like button, follow us on Instagram at The Trading Channel, and I will catch you on the other side of the intro. So in last week's video, we took a look at about 13 currency pairs. I pointed out potential trading zones on 4 of them, and I even explained to you in a very vague way a system you could go through the markets and test to see if it was profitable in those zones. So in this week's video, what I'm going to do is explain that system, that strategy that I talked about last week, down to the very minute detail, talking about entries, the exact reason to enter the market, exits in terms of stop loss and target, and everything else you need in order to actually incorporate this system into your trading plan after you test it, of course. The first step in doing so is going to be going through the pairs we looked at last week and pointed out potential trading opportunities, and I will show you exactly how this system performed based on what we talked about last week in terms of the areas we were looking for trades in. After that, I'm going to teach you the system in a very detailed way so that you can go test it in historical data yourself, verify that it's profitable, and decide whether or not you want to put it into your own trading plan. The first step in doing so is going to be showing you a clip from last week's video on the dollar yen, where we pointed out an area that I was looking for trades in, and then the market ended up getting to that area and putting in the exact trade that we were looking for. I'll show you exactly how to trade this system after we go through these pairs. Let's start off now with the dollar yen. I'll see you in just a second. Let's watch this clip. Okay, so on the dollar yen, the reason I'm looking for possible short trades here is because we broke a major level of support. We have a level here that's been tested as support and resistance many times in the past. So in this specific case, we have a possible reversal because we have our 1, 2, 3 move, possible reversal situation, and we have a level of structure that's been tested multiple times. The market just broke below. Because of that, this level, this area, is a level that I'm going to be looking for possible reversals out of. I'll be looking for trading opportunities out of this area to the downside on lower time frames. And what you can do is go ahead and test these zones with double tops and double bottoms. I'm telling you, you'll be surprised at the results. So go ahead and go through the market and back test that for a while. Decide if it's something you want to put in your trading plan, and if it is, go nuts. Go ahead and start creating. Okay, so as you can see from last week's video, we had this area in red pointed out as a potential trading opportunity zone. The reason for that is because it's a zone that's been tested multiple times. The market was right at this green candle we're looking at now whenever I was pointing this zone out. But what I want you to realize and what you need to understand is that I'm not looking for shorting opportunities on a daily chart. I'm going down to a much lower time frame. For instance, in this particular case, down to the hourly time frame to look for these trading opportunities. What does that do? Well, that means that I don't need a huge move on the daily chart for me to capture targets on a 1-hour chart. Let me explain what I mean in a little further detail right now. So, as we pushed up into the zone, as you just heard from that last clip, in this zone I was looking for a double top. We're looking to sell the market. It's a very specific way of trading double tops with specific stops and targets that I'm going to discuss after we go through this review process, but I was looking for a double top in this zone. If we just look at what the dollar yen did, it looks like no one could have won a trade based on that analysis. But if we look at where the market was, we consider that we got into our zone, and then you consider this wick right here, on this long wick on this green candle, that gave us everything we needed in order to capture targets on a smaller time frame, like the 1 hour chart. And what I'm going to do now is take you down to that lower time frame and explain the double top situation that happened and how we were able to capture targets based on that double top. So let's scoot this way. At the time of last week's video, we were about right here. And as the market moved hour by hour, if you'll keep your eye on this end of the chart right here, you'll notice that eventually the market put in a double top, right? And this is going to be one of the rules, one of the specific rules for entry on these double tops. I'm going to need this double top to be followed by a red candle, a semi-significant red candle, so kind of big, right? And that rule will be stated later on as well. But as we come up, we do get a red candle in this doji right here, but then a few seconds later, we're still creating this double top, and this, that was a terrible line, but we create this double top, we get this red doji candle right here, and that gives me what I need in order to place a trade because I have a double top with a red candle kicker. So as long as I have a double top and that red candle along with it in this zone, I'm ready to place my entry. So we placed an entry. Stop loss was going to be 1 ATR above this swing high. So if we look at the ATR indicator, it's in the top left corner of your screen, or it's in the top left corner of my screen. I'm really not sure where it's going to be for you. The camera angle confuses me. I think it's in the top left corner. It's 9 pips right now, and it's 9.5-ish, so I'm going to go with 10 pips. So if I go 10 pips above this swing high, you'll notice that that would have got stopped out, right? So that would have got stopped out. But if I look left, right here is a level of resistance I wanted to make sure I was above. The reason for that is because it was likely that this market may come up and test this level of resistance. So I decided to go 10 pips above this level of resistance instead of 10 pips above our double top. And that's exactly what I did. Doing so gave me a 25 pip stop loss. I decided, and the way I trade this is going to be a hint into the actual strategy itself, is after my stop loss is placed, I'd like to do a 1.5 risk reward on these trades. I normally can get a 1.5 on the hourly time frame, even if the daily time frame doesn't take off in the direction I think it's going to. I can still capture some wins based on this analysis down on this hourly time frame using 1.5 to 1 risk rewards and an ATR stop based on either above the stop loss, above the double top, or below the double bottom, depending on the direction, or like we did here, above or below the zone itself or the previous resistance level you think may continue to be resistance and the market may test again. So that's what we were looking at on the dollar yen, and that's how that played out. Ended up being a winning 1.5 to 1 risk reward trade. So the next pair we had a possible trading opportunity on last week was on the Aussie dollar. And at the time of last week's video, this is about where the Aussie dollar was. We were coming down to a level of resistance that had been tested multiple times, and I really anticipated this level to become support and push the market higher. Let me show you how much the market disagreed with that analysis. We immediately pushed down, but if I drop down to a 1 hour time frame, that was the analysis from last week, and of course I was looking for a double bottom in that area since I'm trying to go long with that green candle kicker, right? So let's drop down to an hourly time frame, take a look at that trade, and it is going to be right over here. So on this time frame, we come down into our zone, right? We come down, we make it to our zone, we have this bottom here. We then have this next bottom. I know my lines have been a little crooked today, but if this was a straight line, you would see that this bottom did touch the bodies of this bottom. I'm going to explain the rules for a double bottom and double top later on in the video, just to understand that that's what I need. And I did get a green candle kicker right there. Even with that being the case, the market disagreed with the analysis and put us into a losing trade of 37 pips. And let's think about this. Why is the stop loss where it is? You know, I said that we were going to be looking at stop losses below the lowest low of the double bottom, right? Well, if this zone is an area that I expect the market to come up from, then why, if the stop loss from here is right here, let's say our stop loss on this double bottom would have made it only to right here, which is still inside of our zone, why would I keep a stop loss there if I expect this zone to become support or resistance, right? In this case, support. So because of that, I decided to go outside of the zone with a stop loss, which is a rule we're going to discuss later on in the video. But this is how that Aussie dollar trade played out. It ended up being a loss here for about 37 pips. But remember, we're trading with a 1.5 to 1 risk reward. So even with this losing trade, we're still in the positive with a 50% accurate strategy, right? With a 50% accurate strategy, that's how traders still make money. They have a higher than 1-to-1 risk reward. So the next trade that we had, let me take a look at my paper, was the Euro Aussie. That was the next trading opportunity I pointed out, and what I'm going to do right now is go ahead and show you a really short clip of pointing out a zone on the Euro Aussie that I was going to be looking for, double tops or double bottoms in. So I'll see you right after that clip. Let's take a look. So if there's no trend, what's my next level of possible counter trend, I guess you could call it, trades? This is a level of resistance I would possibly look at for short trades. But so last week here on the Euro Aussie, you can see that I had an area I was pointing out as possible resistance based on the fact that this market was consolidating, and I needed a really good entry reason here in this area in order to go short from this area. This area existed between 1.6322 and 1.6291. As you can see, this is where the market was during the time of last week's video. And if we push sideways, you can see the market barely touched our zone, but then in fact did push down. I'm gonna go down to the hourly time frame. Since this was resistance, I was looking for a double top in this zone. We'll go take a look at that trade right now. Scroll sideways. For me, this ended up being a really good trading opportunity and a really good entry reason, because we not only have our rules met for a double top right here, but we also had a shooting star followed by our red candle kicker. And because of that, I decided to go ahead and place this trade. Again, we want to make sure our stop loss is above our zone of structure, our zone of resistance that we point out. In this case, it was, and I placed it with a 1.5 risk reward, as we've talked about throughout this video. And this trade ended up being a winning trade of about 122 pips here on the Euro Aussie. Now, the final trade that we had was on the Euro New Zealand. What I'm going to do now is play you a clip of the Euro New Zealand. We'll discuss the analysis and the trade on that pair, and then we'll dive deep into a detailed description of everything you need to know in order to actually take this strategy and this system, backtest it yourself, and everything you need to know in order to put it into your own personal trading plan. So let's take a look at that clip, and I'll be right back. We're going to move on to the Euro New Zealand. On the Euro New Zealand, we have a possible shorting opportunity zone. The market's in right now, and so as you can see from that clip, we had an area pointed out in red that you can see on your chart for trend continuation short trades here on the Euro New Zealand. Now, the market was about where it's at right now on the chart during that time. What I want you to pay attention to is what the daily chart itself did first, then we'll drop down to the hourly and I'll show you the actual trade. Obviously, on the hourly chart, based on what you've seen in this video, I was looking for a double top with the rest of the rules that we've kind of described that we're going to go over in just a second. But as you can see, on the daily chart, we come up into our zone, we get one red candle, but this currency pair doesn't necessarily break into a downtrend, right? We don't necessarily come break below our previous support levels and continue in trend. But the beauty of going down to a 1 hour time frame for your trade and for your targets is that you don't have to have this market do exactly what you thought from this zone in order to still potentially make profit. And so what I'm going to do now is take you down to that hourly time frame and show you the actual trade. So let's see, did we get a double top with our red candle kicker? Let's check this out. All right, so here, what we end up having, and I want to explain this a little bit too, we did get a nice double top with a red candle kicker. Right here on this previous top, a lot of you may be looking at this going, well, what about this double top here? Well, this would have been a double top only if this candle would have touched the bodies of those previous highs. Because it didn't, this did not qualify as a double top for me. And this little touch here was more of a triple top situation. I want these double tops and double bottoms to look really clean. And if I have this coming up in the middle of my double top, then this doesn't really count as a double top for me. We'll explain actual rules for that directly after this. But what does count as a double top is this move higher here. This move up to this point, followed by our neckline, a push-up, retest of that, long wick to the top side, and red candle kicker right here, all inside of my zone. Stop loss went above this wick because the wick of this double top was already at the top of that zone, and ended up with a 1.5 to 1 risk reward that did get hit. So let's think about this overall. We won 3, lost 1, according to the exact rules I'm about to teach you. Let's put that on a calculator. So here's a calculator. We won 1.5 times 3, which is 4.5. We lost 1. So overall, I clicked the wrong button. Sorry, hold on just a second. We're going to do that one more time. 1.5 times 3. It's obviously 4.5 minus 1 means 3.5. That means if you're trading with 1% over last week, would have been a 3.5% week using this. If you're trading with a 2% per trade is what I'm talking about. You're trading 2% every single trade you place with a 2% risk on your total account balance, then it would have been a 7% gain in just a week. That's That's a really, really damn good gain over the course of a week. But that's the potential of using something like this, using the daily chart for major levels of structure, support, and resistance, dropping down to the hourly chart or a lower time frame for that matter, and using something like double tops, double bottoms with the specific rules that I'm going to show you. Of course, this is not 100% accurate. Of course, it's not guaranteed that you'll ever make 7% every single week or anything like that. And I'm going to explain all that in just a second too. And in no way is this financial advice. I don't expect you to go start trading this. If you do, you're making a mistake. This is something that must be tested through historical data. And with that said, it must be validated by you. And you have to decide your risk tolerance, what you want to trade based on, and whether or not you want to put it in your trading plan. So with that said, let's dive into the actual strategy itself right now. So as normal when talking about strategies, we're going to start off on a blank chart. Here you can see what I consider to be a double bottom based on the rules I'm going to share with you today. So first we're going to look over the rules themselves for entry, and then I'll go into discussing stops and targets for both the double top and double bottom. Then we'll look for some real world examples, just like we just looked at in the review process. We'll just go over a few of those. That way you have a complete understanding of the strategy and you'll be able to take this strategy, go out in the markets, test it yourself, and come up with a trading plan around it so you can start profiting from it. Let's go ahead and look at the rules for a double bottom right now. On a double bottom, I'm looking for this initial swing low. So this initial swing right here has to be a low followed by at least 2 green candles. So on a double bottom, the first thing I look for is a swing low followed by 2 green candles. At least 2. Can we have 3? Can we have 4? Yes, we can have as many as the pullback comes with. We just have to have a minimum of 2. After that, at least 2 green candle pullback up, I'm going to need to see at least 2 red candles back down as well. Can it be more than 2? Of course, but we have to see at least 2. So for a double bottom, we're looking for a swing low, followed by 2 green candles, at least 2, followed by at least 2 red candles on the way back down. After that, the next thing we have to pay attention to is this area between the body and the wicks of our first swing low. So we have our initial swing low here, and what we want to see is a market that after our pullback and this retracement yet again down to our first swing low, a market that at least tests this area we have here in between the bodies and the low of the wick. Can this wick go further than the first wick? Yes, it can. Can this body of this candle close inside of this area? Yes, it can. We can have that as a valid double bottom as well. What we don't want to see is something like this, where the market closes up here and the wick of this second bottom doesn't at least touch the body of this first bottom. That would not classify this as a valid double bottom. For me, we need this wick to at least touch the bodies of the first swing low. Another thing that would invalidate this pattern is if we got a close below of that swing level, something like this. In this case, this would not be a valid pattern. We need to see this bar close inside of that area, or at least the wick of this bar touch that area. Outside of that, we don't have a double bottom. Now, as a final rule, the rule for entry on a double bottom, if we have, let's go over this once more, our swing low followed by 2 green candles, at least 2, can be more, followed by at least 2 red candles, can be more, and we touch our lowest body of the swing low, the initial swing low, but we don't close below the wick of our initial swing low, then we have a valid setup for a double bottom, but we need our entry reason. Do you remember what our entry reason was? Our entry reason was nothing more than a green candle. So in this specific case, we have a green candle here. The way we would look at this, the way we would actually place this trade is by taking our position tool, and as soon as this candle closes, right here, as soon as we have our green candle, my entry goes at the close of that candle or the open of the next candle, however you want to look at it. They're both the same thing. So we would just have our entry at the close of that candle. For stops and targets, we'll go ahead and go over that. We have, and we'll do more of this on a chart so it makes more sense, but we're going to do initially a stop loss that's below our previous swing low, right? The lowest low of our double bottom. If this low was lower, it would be the lowest low of our double bottom. So we're going to go 1 ATR below that level. Let's pretend, just for simplicity, that the ATR is 20 right now. So we have 56 right now. We would do 76. Now, here's something we need to think about with our stops. At this 76, what I want to look for is to see if this 76 is outside of my zone. Let's say this is our green zone, and our trade would have to happen in it. Let's say this is our green zone, and I'll actually color it green to make it easier for you to understand. Here we have our green zone. Is this stop loss outside of our green zone? That's the first question we have to ask whenever we're looking for a place to put stops. And if the answer is no, then we're going to want to move down below our green zone with the stop loss, and our targets are going to be at 1.5 to 1 risk reward, which I can't get to on the chart currently, so let's keep going. 1.5 would be right there. Now, another thing we pay attention to here with the stop loss. If this stop loss is out of our zone, but there's a level, let's say, of support looking left, right here, and the candle looks something like this. This is the swing low candle of that level of support. I would want my stop loss to go below that level if it's extremely close, like we are right here. An example of this, if you rewind the video, was when we were looking at the dollar-yen trade, and we had a level of resistance that was really close to the end of our zone. The market was almost at, and I wanted to get below that or above that resistance level with my stop loss. So this is the two things we look for during finding our stop loss, and of course targets after you find that stop loss are set at a 1.5 to 1 risk reward. That is the double bottom trade. We'll take a look at some real examples of that in just a second, but right now let's move on and take a look at an example of the double top scenario with this exact strategy. Here is our double top scenario, and it is exactly the same as the double bottom, just flipped upside down. What do I mean by that? Well, we have our swing high. This initial swing high here must be followed by at least two red candles, can be more than two. And that pullback must be followed by at least two green candles moving up, and it can be more than that. With that being the case, we also need a termination in this zone between the high of the wick of the initial swing high and the high of the bodies of the initial swing high. So for an example of what would not be a valid double top situation is if one of these candles were to close outside and close above our initial swing high. That would mean trend continuation, and we don't want to trade a double top if we expect trend continuation. Another example of something that would not be a valid trade would be if this market looked something like this and did not, in fact, let me pull this down, touch the bodies of our previous high. So here you can see that this candle wick does not terminate in the zone we have pointed out between the high of the bodies of the previous swing high and the high of the wick of the previous swing high. Because of that, this would not be a valid double bottom. A wick can go past it. A wick can terminate in the zone. The body of the candle can terminate in the zone as well. All of that would be valid. The only two invalid situations would be what I just discussed. Now, let's talk about stops and targets in this case, which let's go ahead and not get ahead of ourselves. We have our double top. Remember, now we're looking for an entry. We would have an entry on the close of our red candle. Since we have a close of that red candle, we would enter the market at that red candle, just at the close of the candle itself. Let's pretend again we have 20 pips on the ATR. So what we'd be looking for, let's go ahead and color in our zone. We have a red zone that looks like this. And in this zone is where our double top happens. And we want to make sure that after 20 pips, we have 68 right now, 78, 88 will be our stop loss. Is that above our zone? The answer is yes. So in this particular case, as long as there's no resistance levels back here, like we had on the dollar yen, as long as we don't have something like this back here, where there's a little bit of a higher wick, something like that, then we're totally fine to leave the stop loss where it is as long as it's outside of our zone. The next step is our target of 1.5 to 1. And that is exactly what that trade setup would look. That's an example of the double top and the double bottom. Now what we're going to do is take this down to a chart, actually look at 1 to 2 examples of this to help clear it up completely for you. And that's pretty much the exact way the strategy is going to go. I'll also be talking you through how to spot these potential trading zones as well, very briefly, because I go over that in almost every YouTube video I do. So you can go back through any of our YouTube videos and figure out how I spot these opportunities and these zones, but I will be going over that in just a second as well, very briefly. So let's jump down to the charts and actually take a look at a couple of trades on live charts. So at the intro of this video, if you'll remember back, I talked about consistency and confidence, and those two go hand in hand. There's no way to have one without the other. What I just showed you is how to have consistency in your trading. This is called a rules-based trading system. It's the only way to stay consistent. Otherwise, like we talked about in the intro, you'll be trading based on shooting stars one week and based on double bottoms the next and overbought markets the next. You'll never really be consistent. You'll consistently switch systems, and this is what leads to 95% of traders blowing their accounts. So having consistency is one part of that equation. The next part is confidence. How do you gain confidence? Well, the first way and the best way to gain confidence is to take a strategy like this and test it through historical data. See what it produces in terms not only of the amount it can make, but the amount it can lose. I want you to think about this for a second. Every strategy that you've ever heard about or been taught by some trading guru or created yourself has strings of losses. These losses are called drawdowns. There's no strategy that's 100% accurate, and you'll never lose money while you're trading. But the point of having a trading plan that has the correct risk management plan, that you've tested and verified what you should be able to expect from that specific strategy, is that you now know what that drawdown is going to be to an extent. And no, it's not 100% accurate, but it'll give you somewhat of what you can expect out of that strategy. So if you were to take this strategy, this system, go out and trade it on your own, and you lose 4 trades in a row, chances are you'll be like 90% of other traders, and you'll say this shit doesn't work, and you'll just completely quit this strategy and start something else. Whereas if you were to continue trading it based on your back-tested results, based on what you saw this strategy do in historical data, there's probably been times that this strategy lost 4 in a row and still came out with a positive expectancy by the end of the year. As traders, we're not looking to win every trade because that is, in fact, impossible. So we don't want to look for things that are impossible. Instead, what we do as traders is try to create a statistic advantage over the market. The first way of doing that is consistency. The next way is confidence, so you can continue to trade that plan consistently with those same consistent rules. If you do that, it will improve your odds of becoming a profitable trader dramatically and could set you apart from the 95% of traders that lose money, putting you on the path to the 5% that make money and are consistently profitable. Now, if that's something you are interested in doing and you want to speed your process up even more, and you enjoyed the content in this video, then I do have a mentorship program called the EAP Training Program, where I will be there step by step with you every step of the way. As a mentor, you can email me with any questions you have and I will get back to you ASAP. I also send out 3 to 5 of my favorite trading opportunities throughout the week, every single week. We review those trading opportunities so I can show you me going in and out of drawdown, helping you with discipline. And of course, it comes with a full training course, a full system and strategy that is rules-based, just like the one I taught you today, and that has proven to be profitable over the past 3 years. In no way is that a guarantee that it can be profitable. Legally, I can't guarantee that, but I'm just saying over the past 3 years, it has produced profits. So with that being the case, I'm going to go ahead and end the video here. That link is in the description. It's called the EAP Training Program. If you enjoyed the video, click that like button. Go ahead and click that subscribe button if you want to receive more content like this. We also have some free trainings listed below that will be very similar to this, show you other strategies and systems that I've developed over the years. Make sure to click that in the description as well if you're interested in improving your trading. And I will talk to you guys in the next